Hello everyone, welcome to Elliottwave.com YouTube channel. My name is Henry. Today is Thursday, May 19. The time is 1:45 a.m. GMT. For today, we are going to update you on the Dow. This is Dow Futures 45 minutes chart. Now we got another sell-off today in the indices, especially in the US market as the Fed continues to basically want to raise, to hike the rates to fight inflation. So we can see this is a short-term view, so you don't have, like a lot of the full information, of course, but we can try to explain as best as possible within the context of the short term. So we ended with A here and we ended with B here, right? So that means we are within the with C to the downside now as an ABC. You can see in the B here is in the form of a zigzag, also ABC finish here. Turning lower, we can see in the sell-off today um, definitely looks impulsive. So we have not broken below the previous low, but I think judging by the price action here, I think it is fair to say that we are almost certain we're going to break below the previous low, and therefore confirming the next leg down has already um, continue again in the US stock market. Okay, so simply then what we are looking for is that any rally should fail below the 32695 in the Dow and continues to go lower. Okay, so if you only care about what's going to happen in the next few hours, the next 24 hours, and so on, then simply the chart here is pretty straightforward. As long as we don't break above that high from May 17, then we should continue to see for the downside for the Dow futures. All right. So now let's zoom out a little bit to get an idea where we are, what can we expect, and so on. So let me zoom out to the daily time frame. Okay, and let me put this A and B on the daily time frame here. So this is your A and B here. Okay. All right, so first of all, let's take a look a little bit bigger picture here. This is the all-time high in the Dow, right, which is the January 5th. Okay, so we got all-time high over here earlier this year, and this is of course the COVID-19 low, as you all know, March 2020. Okay, so let's zoom out on the daily like this. So what are we looking at here? So we are looking eventually, according to the 1 hour, going down, right? So we are looking for indices to continue to go down, the Dow. And what are we doing here? Well, at the least we are correcting this 2 years rally, right? So after we finish the after we bottom during the COVID-19 crash, we have already rallied tremendously. We have already rallied tremendously, and then now we are in the process of rolling over. Minimum is to correct this cycle, and I mean that basically the assumption now is to correct this cycle. Okay, so now let's take a look where we are. So we clearly can see, if you kind of try to draw some kind of channel in some way and form, so you see a channel here, and then you see a break above the channel, and then you see another leg down and break below the previous low. So we have three cycles. You can say this is your first, this is your second, and now we are in the third cycle. Okay, so if you just measure extension to the downside, we can see that we're looking at this 100% is 30,696, and then this 27,784 is the 161.8. So depending on what the structure is from the peak here, right, what kind of sell-off do we have? If well, so far what it does look like is it could be corrective, right? It could be corrective. This is a three swing here. Now unless, well, there's another possibility, unless this is a flat, which is possible, A, B, C, right? Now, unless this is not a three swing, so let me show you what the various scenario is. Let's say this is a three swing. So let's just pick any degree here. Let me put it, if it is three swing, then it has to be W, right? Because it's a three swing and this is your X. Now in that kind of scenario, then this is corrective, and then it should, if this is corrective, this should technically stop somewhere here. It shouldn't go below 1.618, because if it goes below 1.618, it will have the risk this becomes an impulse, like becoming a 1 2 3 4 5, right? So that's why ideally it doesn't go below 27,784, but we're getting closer to this target area from where we can find some temporary support in the market. So I don't know if you're doom and gloom type and expecting a crash to zero or whatever it is, right? But if not, then we are not we are not that far away from some support in the market, despite the sell-off, but we are not that far away. We can see a little bit more downside, maybe to reach this. It's just a big area, right? Because it is a daily kind of inflection, so this is a big area, but we are not that far away from the minimum. Now that doesn't mean if we hit here we have to instantly, immediately go up immediately. Like a lot of people always try to find the exact level to the precisions, to the decimals, and which is not possible 99% of the time, unless you got very lucky, right? So we are always dealing, and we will always look at it from the perspective of ranges, not exact level, right? So the range is over here because it's a daily time frame between 3,690, let's say, to 27,784. Don't want to see it below 27,784, or else this can become a lot more impulsive. Okay, so um, the minimum then will be around 30,700. Doesn't mean we have to stop 30,696 then immediately reverse. No, we can continue to go down because the range is a big range. Now in terms of the internal, you may want to ask, where is the starting point of the A here, right? Where's the starting point of the A? Well, the starting point is here, right? The starting point is here. So then if you just measure simply the internal equality, then you simply just want to measure like this. Then the 100% is 29,750, which is still, you see this is what I'm saying here, this internal here, the 100% to the 161.8% of the AP is still within this area, is also within the bigger 100% extension area, right? You can see it is contained within this bigger one right here, right? So this blue box is contained within the bigger red box, right? So that means we are looking for somewhere around this area to finish probably below 30,000. 30,000 is like a round number, it's like a magnet, will attract price to go down, and maybe we should, most of the time we're just gonna break below it a little bit more. 29,000, 28,000, maybe not 28,000. 28,000, high 28,000 is possibility, but we're looking for that area potentially to finally find some sort of temporary low, at least in the stock market, right? Now if we go down all the way to 27,784 though, then we could become a bigger, like the structure can become an impulse, right? Instead of corrective, it can become an impulse and continue to extend lower as a 5 waves. But for now, again, short term, really very simple. Short term is, if you only care about short term, then it's very simple. More downside, as long as we stay below 32,695, we're looking for more downside, possibly to retest 30,000 and possibly break below it a little bit. Okay, so if you want to get regular updates on the charts or analysis like this, you can check our service. We have 14 days trial, and the link is provided in the description of the video. I'll see you all again next time, and have a nice day everyone.